Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a trade idea that I'm currently monitoring. It is to do with gold, and to sum it up quickly, I pretty much think that gold potentially is at quite a nice area to buy, or at least, listen, there's a risk that it could break lower in the short term, but there's also a decent risk reward for a potential pop higher. So this is a trade idea that I'm potentially monitoring to, potentially get into today, um, where you'd basically be getting involved in the market at current levels with your stop uh, roughly around, where is that, 1960 area. Because if we do get the bearish breakout of this trend channel, which is a possibility, wonder why that's green. There we go. Then you want the stop to be fairly close, because if we do break below this bearish trend channel, then we're probably going to fall all the way back to this support term resistance area around 1930, which is also where the 50-day moving average is. So you don't want to be holding on to that trade for too long. But if gold does rebound now, which I think has the potential to happen in the next couple of days and weeks, and back towards record highs, then that's a pretty good risk reward. That's like 3-1, 4-1 risk reward. So I'm liking this idea. I'm going to be thinking about it a bit more today. Why am I thinking gold could potentially rebound and continue to move upwards within this trend channel? Well, we've got a lot of macro events coming up. We just had US GDP data, which was weaker than expected. Okay, yes, there was a price index component, which was a little bit hotter than expected. But the US economic data generally seems to be weakening. Next week we got ISM reports. The last round of ISM reports that we had were weaker than expected. And the upcoming ISM reports next week may send the same signal. We've also got jobs data next week as well from the US, which remains robust for now, but there is other jobs data aside from the official one, like the JOLTS data, which has been showing that demand for labour is weakening, which could be an early sign that weakness is coming for the broader labour market. We've got the Fed meeting. They're expected to do a 25 basis point rate hike. They're probably going to they're probably going to say that they're not going to be cutting rates this year, all the stuff that officials have been saying in recent weeks. But if we continue to get these signs of a weakening US economy, at the same time as bank crisis concerns are resurfacing, we had a big sell-off from First Republic this week after their earnings and after reports that the US government isn't going to jump in with a rescue package anytime soon. This is all raising recession risks for later this year, which is all raising the likelihood that the Fed does a cutting cycle. Now, if this narrative continues to gain traction, then gold should benefit, because it should mean dollar weakness. It should mean weakness in yields. If you look at the dollar, by the way, still seems to be in a short-term downtrend, just as gold seems to be in a short-term uptrend. Of course, there is the possibility that it could break higher. So, I'm not saying these trade ideas are going to 100% play out. You never know in markets. This is not trade advice or investment advice. Your yield's actually moving a little bit higher today, rebounding after a recent dip. But if we are headed towards a recession later this year and a Fed cutting cycle, you probably expect that this is the long-term trajectory, which should be good for gold. But yeah, pretty much, guys. That's what I'm looking at the moment. I hope you all enjoyed this video. I hope you all found it informative, and I'll see you all in the next one.